Hello, long option line swing trading strategy. Swing trading daily analysis. So you perform that analysis after the market close at the end of the day or early in the morning before the markets open. So today is a Sunday, February 16, 2025, and we are going to analyze the chart after the market closed on Friday, February 14. We are going to analyze a small portion of our stock watch list, and the first one we are going to analyze is ECL. When you open your chart here, we are using Thinkorswim. If you have JustSwap account, Thinkorswim will be free for you to download to your computer to use, or you can use the web version, or you can use the mobile version as well. We are going to use maximum daily chart, and ECL, we have our purple line, which is our entry point. That is where we will like to buy. We like to wait for the stocks to fall to that line, and when they start going up from there, we will buy. At this point though, the price is somewhere up there, and when we can zoom, or we can go to 1 year daily chart, and on 1 year daily chart we will not see the low trend line that we trace, and that's why we are using maximum daily chart instead of 1 year daily chart. And 1 year daily chart, you will see a portion 1 year time frame when the maximum daily chart will show us a bigger picture of the trend. Since we are trending, we are swing trading using long uptrend line, we like to buy very low. Therefore, we want a big picture of what is going on. A short trend line, 1 year daily chart will work once you start with the maximum daily chart, and you bought it through a few times. You can switch to 1 year daily chart because you know where the chart is coming from. Does that make sense? So at this point here, a Friday, the price dropped. Although that Friday was the day that it reached a new high, so we are going to wait for that to go down. It might take a while. We cannot really make a lot of assumption on 1 year daily chart. We are going to go more on the maximum daily chart to have a bigger picture. And when I'm looking at it, it seems like it is a stock that tends to have a wide mountain, meaning it go wide, it go tall and wide before it'll go back down. So when it reach that, before it go back down to reach the trend line that I wanted to buy at, it does not go to it often. It takes a while. Once it reaches it takes a while before it go back to it. So when it left there, it pulled a little bit back at some point and continue, and have not touched base with it in a while. So those lines that you can see are years. So 1-2 years it has been away from that line, and it could take a while before it will come back to it. So if I go a little bit to the past, it left that line and spent about a year and a half before it reached it again. Pretty much it reached it 3 years, let me say 2.5 years later. After it left, it reached it 2.5 years later. So if we go, if that pattern will repeat itself again, doesn't mean it will, but if it will repeat itself again, we have 2 years here and a half. So and again is reaching a peak there So I don't know if it's going to take a year to come back to that line or not. So we'll keep looking at it to see what it's going to do. In the meantime, we are not going to do anything but just look at it, because if it's making that wide mountain, it took off from this trend line for a while now, and we do not want to use up a short uptrend line. Swing trading strategy, we like to start with a long trend line swing trading strategy. Therefore, we prefer to buy at this trend line. So we could also trace. I don't like this trend line here. It's just to trace a trend line or a support line. It has to connect 2 points, and personally I like to connect the 2 closest, and this is too far away for me to touch base with that. It's more than a year distance there. I don't like it. This one, if I touch base with it, that trend line ended. If I move it to touch base with this one, it ended as well. It ended somewhere here. Your trend line ended when the price goes below it. So if I use this one, it's going to end somewhere here. So this trend line here is not really going anywhere. I have a smaller short trend line between it, so that's why I'm not tracing that. And pretty much the really consistent trend line that I can trace here long enough, it will be this one. So I'm going to just skip this one and prefer to wait on it. So it might be a while, but we will have it on our watch list and just keep looking at it. So the next one, EQIS, and that'll be the only two we are going to analyze in this session. And we are on maximum daily chart. Yes. So okay, we have this purple line that we like to buy at. There is another trend line from this low, connecting this low, that is going there. At this point, the price is way ahead of this, so we are just going to keep looking at it. And Friday, the price went up. That's why you are seeing that green color there. We can go to 1 year. When you go to 1 year time frame, it's going to show you, we are in February, so it's going to show you this session of what is going on. Okay, so, and what I like about 1 year daily chart is going to show you the 52 weeks low and high as well. But yeah, Friday the price went up. A green bar just means the price at the end of the day was higher than the price in the morning, and the red bar means the price at the end of the day was lower than the price in the morning. The price dropped that day, and the green bar means the price went up that day. So yeah, at this point it's just far away from the trend line we like to buy it at, so we'll just keep looking at it. And you can see this trend line here, May to December or so, we have that trend line there. We'll go back to maximum daily chart, and that will be this session here. So it tends to, if we can trace another one here, it will go somewhere here as well, and then another short one will go somewhere here. But when we are looking at the overall, it tends to have a wide mountain before it will touch base with this trend line. I'm saying a wide mountain in relation to the trend line that I'm aiming to buy at. How long it takes before it comes back there, what kind of design the price draw along the path is a wide mountain. Have a dip here, but now all the way to the line and went back up and then came. So I don't know when it starts, but I'm seeing 2 years here before it touched base with it. and now we have 2 years in as well. It reached that high. We have a high here, and then is making highs as well, but lower than this. You see this one, the next one was lower. Those are equal. The next one is, so it's doing that a little by little all the way to there. So I don't know if he start doing that already or not, but yeah, we have that high there, and after that we have now have a higher point. What is going on is a little bit going down. It's not reaching this high level. But yeah, so we don't know if it started the descent down already or not, but we'll just keep looking. This line could be a good one to buy at as well, because it crossed 2 years time frame. But because the mountain itself can, I don't like to do this to go this way, but the mountain is so wide that we couldn't even see the whole mountain on the screen. So the last time it came close to, I'm not even seeing when it touched base with that line. Okay, so it touched base with that line somewhere here, and when it left, we have 1 year, 2 year, 3 year, 4 years or so, or let's just say 3.5 years or so before it touched base with it again. But between that though, it does a big dip, and then we'll go back up and do it again and go back up. So we don't know if this pattern is going to repeat itself, so we can have that in mind and then go back to where we are here. I will say this dip here could be, those mid dip that we saw 2 in it. This one could be one of them. So there is a possibility, if it's trying to repeat itself, there is a possibility it will do that again. So, and then go back up and make another high. So let's see this one. So this was the first one when it touched base with it. This one was the first one. This one is the second one, like a new high, new mountain. So it made 2 here. If we go back, so when it left, pretty much everything here was a high. So we have this dip, we have this dip, we have pretty much 2 highs and a dip between. So if we go back here, I don't know if this one will be considered a dip, because it's not quite pronounced. So this is well pronounced and aligned with this one, with, like, they are on the same trend line here. Yeah, and continue. So, and then we have this one, but because we have 2 peak already within this time frame, I don't know if it's going to have a similar dip again and go higher before go down, because you only have 2 within this session. But although from where it came from, okay, so let's trace a trend line from here. You see those, okay, and then it ended somewhere, didn't go all the way, so it ended somewhere here. So those dip fell on that trend line that can leave the touch base of here. So, and on the current one, only one is on that trend line. So I don't know if there is a possibility. So technically we could say there was more high, since we are not seeing anything higher around that area. So maybe maybe it's not near ready yet to go back down. There is a possibility that it will have another pronounced dip and go up from there again. There is a possibility. The good news is there is not a big difference between those two areas. So at this level, excuse me, if we want to buy some, in case from there it goes up again to reach a new high for us to sell it, we can. But there is a chance that it may not turn out to be what we expect, and from there on it'll go all the way here. So we don't know. Therefore, we are just going to keep looking to see what it's going to do. We can highlight this trend line so that we can use those two as a reference. If it's touch base before and start going up from there, we could buy some and just see where we go from there. If it turns around and go back down, then we'll be trapped in it for a while until it go back up. But let's keep in mind that it does a wide mountain. It does not shoot up and shoot down, but it progresses slowly and can go wide and then slowly go down as well. So it took its time to go down. So if we get traps in it, when we buy it here, it does not go up as expected, and it goes down, we can get trapped in it for a while. But yeah, that is how we analyze the chart to buy stocks for swing trading. And those two stocks are the one we are going to analyze in this session. And we are going to discuss, since we didn't analyze a lot of stocks, we are going to discuss the long up to long swing trading strategy that we are using. We talked already about the red bar and the green bar, and the support line are up trend lines that we trace, and those are the lines that we use to see where we like to buy, and then we use the high to see where we like to sell, because again, those are large cap stocks. Let me close out this one. They are large cap stocks, therefore they reach a new high often, and we like to use that as our target point to sell, our exit point. When the previous high is exceeded, then there'll be another high. So, and that is one of the exit strategy. So yes, it's good to have a stock watch list of a number of stocks that you think you can analyze on a daily basis within 1 hour, especially if you have a full-time job. You do not have a lot of time. When you are back from work, you'll be exhausted, so you can do that in the evening after the market closes, or early in the morning before the market opens, before you go to work. So the number of stocks that you can analyze on our watch list, we have 79. Last year we have 60 or so, but you have to see little by little. You handpick those stocks to have a watch list of it, and you are not going to worry about what somebody is saying or the news is saying, or you are not going to keep looking for the next stocks to trade. You are just going to use your watch list as the repertoire of stocks that you are going to be swing trading. And the time frame, 1 year daily chart or maximum daily chart. Although with our long up to long swing trading strategy, we are finding ourselves using maximum daily chart, because our trend line, some of our trend line are so low and the price is so high right now that we cannot see that low up trend line on 1 year daily chart. And maximum daily chart allow us to have a big picture of the design that the price is drawing, to see if there is a pattern that we can anticipate will happen again when we are deciding to buy or to sell. So, and we have our entry point, which will be on the trend line, and we pretty much buy, after a pullback or two to the trend line, around that trend line. We are not going to buy. You are not going to buy at exactly trend line, but you let it come to the trend line. If that's where it's going to be, it will start going up and making some zigzag, and you just keep looking at those pullbacks, the red bars, to see if you are having higher and higher of them. When you have few of them, 2, 3 or so, a green bar after a pullback, the red bar are pullbacks, you can get in. That gives you a confirmation that it's down, going down. But when it's going down and touch base before you buy it, you don't know if it's going to continue going down. You are having lower lows. The red bar are the lows, and they are lower and lower. Therefore, you cannot buy right after it touch base with it. It could be an early entry. You want to wait for that to start going up and making a higher lows. And higher lows are what we connected. So higher lows, day after day you have about 2 or 3, and it give you an assurance that is down, going down, and you can get in. But keep in mind that you can do that and turn around and go down. Some of them, they tend to actually change direction, not just having let's just speak this for instance, not just having higher lows going on the same direction, but some stocks that is enough for them to continue going up. But some of them, changing direction matters to them, so they might go up, go down. Even during that down, you will see green bar, red bar in it, and go up before they will start taking off. So you will get in, and just like in this area, for instance, when it came to it, it went up, but pulled back, went up, pulled back. So some of them will do that around the trend line before they will actually take off. So you will just try to minimize getting in too early, but there is a lot of chance you'll get in early anyway, because every stocks behave differently. That's why it's good to see when you're about to buy at a trend line, to see last time it touched base with that trend line, how it behaved there, to see if it if it's okay after 2 higher lows for you to buy at the next green bar, or if there is a chance it's actually going to change direction a couple times before taking off for you to get in. So it's good to just compare the past to the present for the same stock to see if there is a chance that pattern will repeat itself. It might, it may not. All of that is just to decrease your probability of getting in too early. You are not going to eliminate it completely. Okay. And some of them, your action will pay off, and some of them it will not. So you'll be there for a while before it will come. It will, it will start going up. And we try to write down pretty much what goes on in my head when I'm doing those analyses. So when you are analyzing the chart, you can try to write down your process, and having it on paper could help you sometimes when you are you can read it to make sure you are not straying away from it. And if you are, you can add more notes to it in case what you are discovering is an updated version of what you wrote down, or what you wrote down if it's outdated. That way you have your little bit your manual. That is the way you analyze your chart. So we have those, and I'm not going to read through all of them, or maybe I should, I'm not sure, but let's see here. So during this process, maybe there will be another video to just go through about, and I don't know, I'll just let you read it, or we can read it together. But anyway, it's about observing what the price is doing, one price bar at a time. So when you observe the chart, so it is about glancing at the past to see what the price did in the past. It's about observing the pattern the price is drawing, one price bar a day, to see if you grasp the whole picture of the pattern. Some patterns are so easy for you to understand, and some are not. So if you have all of those in your watch list, that's okay. The one that you do not understand, you just don't take any action. You just keep observing it. So it's about determining what area of the pattern you like to enter the trade, and when you like to get out. And entering the trade just means buying some stock, and getting out just means selling it. And your interpretation of the daily chart will differ from mine. So it is okay to get in a little early if you buy some stocks and then it turned out to be that now it turned around and went down. That is okay. And it is okay to get in a little late as well. If you are waiting too long to get in with the long option and swing trading strategy, what I notice is they tend to the chart tend to wander around that area for a while before leaving it. So you will have time to get in. Even if that's a little late, that will be fine. I just want to make sure you are tracing a short uptrend line that can guide you to enter after a pullback. If you are not buying it right at that trend line, even if it is at that trend line, it will have its own short uptrend line that you can use to guide yourself to find the entry point, to make sure you are buying it in an uptrend or on an uptrend line, even a shorter one around that main trend line that you like to get in. And it is okay if you don't take any action at all, especially when you do not understand the pattern and you don't know the direction it's going. It's okay not to even get in at all, and just use that time to just observe what is going on. So, and when you are not sure, you don't buy, or you just spend very little money to buy, it is okay as well. That is one strategy that's here. So before you buy a stock, think about if your timing is wrong, what will happen? How long you'll have to stay in the chart, in the trade, before the price comes back again to that level. If we get in this example, if we get in here and it does not go up from as we expected, it goes back down to here, how long will we stay in the trade waiting for the price to come back, because we are not going to sell it at a loss. So if there is not a lot of gap in it, you want to take action, that's fine. If there is a big gap in it, you might want to think twice, either spend just a little money or not taking action at all. So those are things that is good to think of. So, and again, we are not trying to get in before it happens, but we are getting in it after we notice the pattern. We are not going to get in before it reaches the trend line. but we are trying to get in after it reached the trend line and start going up. So the price is drawing a mountain, the zigzag. We want to buy at the valley when it start going up. So to see the valley, it has to actually reach the line and start going up for you to say that, well, it reached this valley. You don't want to buy on its way to the valley. It might be an early entry. You have to wait for a while for that to reach the valley and start going up before it catch up with you again at the level you enter it. So you have to see the mountain peak and the bottom of the mountain to be able to determine the valley, to say that, well, where this price is right now is that the valley and start going up. I like to join the race. So at least the strategy that we are using, that's how I'm interpreting it. Okay, and again, during the process, when you're analyzing the chart, you're analyzing the chart after the market closed. So you want to see the price bar of the day that the market closed. You want to see the price bar. Is it a green bar? Is it a red bar? It does not mean a lot to you, but by trying to see what it is, sometimes you might notice that, oh, there is a gap up or a gap down. So, but with a long up to long swing trading strategy, you like to compare the today's price to the trend line to see if it's close to it, if it's still far from it. If it's far from it, there is not much you are going to do. You are going to just quickly move to the next stock. You are not going to spend a lot of time. You are just comparing where you want to buy to where the price is. If it's far from it, there is nothing you are going to do about it. You just want to see if it's red bar or green bar, the last price bar, and you just move to the next stock. So when the target location to buy or to sell is reached, that's where you actually pause, spend more time, zoom, and see what is really going on around that area. And for instance, let's say it reached that area, then you zoom to actually see what is going on there, and you start thinking about your strategies. How, like, are you seeing a higher lows? Are you seeing higher lows, or are you still continues to see lower lows? So you start, keep checking, because you are looking at to determine when it's ready to start going up. You like to join. So that's when you start paying more attention to what is going on, because it reached the target point. If you want to sell though, that means you are aiming either 5% return, like from where you bought it, if the price increased 5%, you start thinking, do you want to get out of it, or based on where you bought it, will that reach a new high? So if you bought it at the trend line, there is a chance it will reach a new high. So you'll be paying attention to it to see, how far the price is to that high and how far the price is to where you bought it. So you'll be paying attention to those. And again, as is, the price is going up, it's good to compare it to the previous high, how the price behave around that area. Did they continue all the way to reach that high, or did they pull back and things like that, to see if it's just better you sell it to get out, or if it's okay to stay in until the next high. So, and that is when, if there is a certain major pullback, you might decide maybe I will sell it, and if that pullback happens and start going up, you can buy it to have a shorter line there. So as well, that way you can lock in some previous gain before you enter it. So you start with a long upturn line and end it with a shorter line. That is okay as well. It's all depend on the pattern that a specific stock is drawing for you and how you interpret it. So, but yeah, and then it's okay to check for seasonality as well, especially if you are buying or you are selling. You can see how the price behave at the time you are in compared to the previous time frame, to see if there is a pattern to it. For this particular stock, let's zoom back. So this dip here happened in May, this one in October, so we are in February here, and this one was in March. So it reached a peak in March, and we are in February. And if I'm looking for February here, I'm not seeing anything. In fact, February will be before it. So February is on its way up. So after a reach peak in December, so December we didn't have a peak here. We have a peak in March and a pullback. So here we have a peak. So pretty much what you are going to be doing to see if there is a repeating pattern due to a season of the year that is influencing the price behavior of that particular stock. That could help as well. But you may not see the same pattern necessarily, but it's worth checking. And quality earning is something as well. It's worth paying attention to. I don't try to know when the next one will be, but when you purchase the stock and you are waiting to sell, you can look to see at the previous earning how the price behave. Did they go up or did they go down? For instance, this one at that earning, the price dropped there. For this one though, it just continued going up. For this one, it dropped. So is it like one it goes up, the second one it goes down, one it goes up, or what? You don't know. But it's worth thinking about those things as well, if that will influence your decision. But I don't really pay attention to them when I'm making my decision to buy, but they could influence my decision to sell if it reach a good return and earning is paid. I will try to see right after the previous earning, did the price drop? If so, maybe I might decide to get out of it there. But again, it's after the fact. I don't pay attention to trying to anticipate what will happen, especially if it does not repeat the same pattern. But yeah, it's pretty much comparing those things. So entry point, there, as you are buying things, you can see if your entry point was well timed, or if the price went the opposite direction that you anticipated. And I try to have some that I screenshot to have so that I can reference it. For instance, this one I purchased it pulled back a little bit, but then took off. And there are some it will pull back, it will actually change direction a couple times, not just higher lows going the same direction may not be enough, but it will actually change direction before taking off. And I purchased it after having higher lows, those red bar higher than the previous one. Purchased it, but it actually pulled back, went up and pulled back again. So, and in fact, it has never gone back to where I bought it. So those situations will happen. And another one as well, purchase it after it left and it pulled back and still is on the low. And you see, at this point, there is a chance that it could be going to the next one. So I will have to wait for a while for that to go up. Early entry, even though it touched base with it and start going up, and I have that small trend line there and bought it at the green bar that followed that red pullback, it was not enough. It pulled back again. It was not ready to go back up. So, and let's see, And this one, we purchase it. After it, it start going up from there, and it was a good timing. It's still going up from there. So yeah, every single one of them will behave differently. And this one again, it touched base, start going up, pull back, and we got in, but it was not enough. It pulled back again. It's not done. So maybe it's going back to the second one. We don't know. The arrow just show where we bought it. And this one, we bought it, and it pulled back, went up, and pulled back again. So it's still wandering around the trend line. Has not really take off yet. Give plenty of time to somebody else to get in the trade as well. We got in early, still close to the trend line, and is wandering around there. Maybe from there is going up. It may not decided to come down here. We don't know. It's slowing down there, resting there, and it's not something we will have known about unless it repeats that pattern that trend line before, that we can use as a reference. But yeah, it can happen because we don't want to sell at a loss. It's just going to be unrealized loss in the account, the portfolio for a while. Another option here that I think I must have gotten a little too early, but again, bought it a little bit too far from the trend line because clearly it went back to it. So those are things that we do it, and then we learn from it, and we see, okay, we need to wait for that to go back to it. And how much to invest? Well, if you are just starting out, just buy one share and aim for 5% return of whatever that one share costs you. Or you can spend $300 per trade. Even $100 will work as well, as long as that 5% return is high enough to pay for the brokerage fee, and you still have few cents left. And just a little by little, you'll practice the strategy you are using small dollar amount to do it, to customize the strategy to fit who you are, your personality trait, your risk tolerance. And as you are finding more money to invest, you have a good understanding of the strategy you are using, and you are more comfortable increasing the amount you are spending per trade or buying more than one share. But just don't buy one share and expect a big return from it. The return will be small. At that point, it's not the return that matters to you, is practicing the strategy while making a small profit. Is a profit nonetheless, is what matters. A profit, no matter how small it is a profit. So start small and grow your account from there, and don't add margin to it. Even if your account is eligible for it, the higher the risk, the higher the reward. Yes, but start small with your own money and just go from there. That way you decide, you are the one in control. You decide when to sell a stock that you purchase. If it's negative in the account, you can just leave it there. It's good to start with a good strong stocks. That's why large cap that you handpick after analyzing them is a very good one. If it goes down from where you bought it, it is okay. You know that stock is not going anywhere anytime soon. And we have videos on how to pick those stocks to create your watch list. Will you please check the playlist in the video description for those watch list videos. But handpick your stocks. It takes time to do it, but once you have that, it is a library of stocks that belongs to you that you just tap in, you analyze on a daily basis, and when a one is well positioned, you buy. And when you find more money from your paycheck, you put in the account, aiming for the next one to buy, and so forth. And when the one you purchase have a good profit you are comfortable with, you sell it, you lock in that profit, and you wait again for the price to go down to where you bought it from for you to buy it again. You buy at the valley of the mountain, you sell it at the peak of the mountain. That is the strategy in a nutshell. So we have some example of exits point here. Where the arrow is facing down is where I sold. So I bought it there and I sold it there, and that area was a new, no, this was a high point. When it was close to it, I didn't know if it's going to continue going higher up. I sold it. The next day or so, it surpassed that previous high. I locked in some profit, so I sold it there. 2 days later, it reached a new high, fell back a little bit, and continued, but still higher price. I'm not trying to have the maximum profit. I'm okay leaving some money on the table and walk away with some that I'm comfortable with. That strategy is different from if you are trying to be the best at it. We are not trying to be the best at swing trading strategy. We are at swing trading. We are not trying to be the best at the strategy we are using. We are just trying to make money and to be financially independent and not depend on our employers to pay for our need. And locking in some profit is the objective here. So locking in some profit, if it continue going up, that is okay. So because alternatively it could turn back on us. So that's why we bought it there and we sold it there when it was close to the previous high, but then it continued up, surpassed a little bit and pull back. That is another example. So, and for this one, we bought it there and it pulled back on us for a while, and when it reached the high, we sold it. Allow us to have some profit, but you can see how long we stay in the game. It took us months after we bought it for that to go back, surpass that area and reach the next high. We sold it and it pulled back. And another example, is it the same one? No, it's not the same one. So another example, we bought it at a shorter trend line and it took us a little bit, it pulled back, and when it went back, we sold it. It was a high there, we sold it. It pulled back and went back up to create another high again, and it's doing that, but we are going to wait to buy it at the trend line that we set for it. But when we got in, it took a while as well for that to go back up. We just stay in for the time frame, more than a month or so. Here is showing December, and we sold it toward the end of January. So more than a month time frame, we stay in it. We didn't sell it at a loss, and we sold it to lock in some profit, because where we bought it to where we sold it, there won't be a lot of difference between it. So the profit won't be a big one, but a profit nonetheless. Yes, the fund got frozen in that stocks for a while, but at least we didn't lock in any loss. So that is another one. We bought it as well, and it was not the right place to buy. We bought it right at the peak, and it didn't make a bigger peak. It pulled back, and it took a while as well. It pulled back and went back up to reach a new high, and we sold it. But because we have bought it at a higher up, when we sold it, the profit won't be a big one either. It's not like we bought it at the trend line here. So another example, KC. So we bought it there, and as it was going up, we didn't know if it's going to continue going up or not, and we just sold it so that we can lock in that profit. And yeah, and while we are talking about it, let's put it out to see what it did. Okay, we bought it there and we sold it there, but guess what? It pulled back and then went up. So this pullback could have wiped out maybe 2 days of profit here. It wiped it out in 3 days though, but then went back up and reached a high here, higher than, I think we sold it right close to this previous high when it reached it. But then right before it reached it, but it pulled back. It didn't really go up. It pulled back and then reached it. But again, we got out of it maybe a week prior and locking that profit that it could have, this area could have wiped out before getting it back. But we buy and sell stocks around noon. By noon though, this high could have been reached and pull back again somewhere, I don't know, because it closed at the end of the day at that level. That's why it's red bar. Open in the morning somewhere there, but reach that high level. So by noon it could have reached that high and pull back. If that was the case, we still wouldn't have sold it at a higher price. We have to stay in the game or sell it at a level that will put us at this bar that we sold. I don't know if it makes sense. So again, we are not trying to have the maximum profit, although the game is when it reach the new high we sell it. But when it was close to this one, we just sold it and lock in that profit that we gained along the way. So that is just doing it a little by little and just paying attention to what is going on. And I think that's why having a stock watch list of those stocks that you trade will allow you to see those pattern repeating itself, to get you familiarized with the same stock over and over and over, instead of finding yourself with a brand new stock that you never traded before or you traded a while ago, years ago. So having a stock watch list that you trade over and over and over, you'll get to notice if there is a pattern that tends to repeat itself with that particular stock, and every stock is different from the other. But spending time with them might just give you that advantage of noticing a few detail, few behavior, few price movement that is unique to any particular stocks that you have on your watch list. At least that is the goal. And once a year, you can just review your list and take the stocks that you didn't have a good experience with out of that list and add a few more from your master list that you think are good one for you to give a try, to add them to it as well. But yeah, that is just, in overall the daily chart analysis process that I will encourage we all go through on a daily basis. And and without even thinking about it, you will be doing those things as you look at the chart, comparing the present to the past, and thinking twice before you take action to buy or to sell. For more of our videos related to swing trading, please check the video description for the playlist. Thank you. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all of your comments, and we thank you, every single one of you that subscribe to our channel. We thank you very much. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you.